Globally, let's talk about everything that you should track in terms of the Indian market action, as well as some of the individual stocks that could be in focus in today's trading sessions. We have our research team here to prep you up with all of that. We have Ekta, Surbhi and Nigel also here with us to take you through the trade setup. Guys, a very good morning to all of you. Ekta, coming to you first. We did get a weak session on Friday. How are things looking this morning?
Thanks for that. Well, yes, the markets did fail to hold on to the intraday recovery as banks fell in the last hour of trade on Friday's trading session. But what we saw was that the FIIs net bought after 17 consecutive sessions of selling. So let's see whether that sustains. And DIIs net sold after 15 consecutive sessions of buying. Now, in terms of the global cues, oil prices have jumped 6% due to geopolitics. Brent was up 5.8% on Friday's trading session. Saudi Arabia has paused in terms of talks when it comes to normalization with Israel. Iran's warned that the war could expand if Israel's siege of Gaza continues. So this will weigh in terms of sentiment on the markets. US closed lower on Friday, but it was up for the second consecutive week. We have Asia, which is largely lower, and the gift Nifty, which is indicating a lower start. Earnings continue to be in focus, so Avenue Supermarts, Dalmia Bharat will be reacting to numbers. But in terms of numbers today, lots from the banking space and financial space. HDFC Bank, Federal Bank, Bank of Maharashtra, ICICI Securities, Jio Financial Services, to name a few, which will be reporting their numbers today.
All right, Ekta, thanks a lot for getting us all of those cues. Let's also talk about the individual stocks that we should watch for in today's trading session. Surbhi is here with that list. Surbhi, Ekta was just mentioning that, the earnings are in full force now and we're really in the middle of it now. So take us through all of the results that came through and any other important news flow as well.
Thanks so much for that. So as she mentioned, Avenue Supermarts and Dalmia Bharat will be reacting to numbers. For Avenue Supermarts, the gross margins continue to be under pressure. The revenues were up 19% on a year-on-year basis. Margins came in at 8% versus 8.4% same time last year. Dalmia Bharat, the revenue came in at 3,150 odd crores. The EBITDA and margins were above the CNBC-TV18 poll. EBITDA came in at 589 crores versus a poll of 549 crores, and margins came in at 18.7%. Tata Motors, the company is going to sell a 9.9% stake in Tata Technologies for 1,600 odd crores. This ascribes an equity valuation of 16,300 crores for Tata Technologies. TCS, the company concludes investigation into their resource management function, and the investigation has found 19 employees to be involved. Delta Corp, the company gets a tax payment notice of 6,384 crores. Suntech Realty came up with their Q2 business update. The pre-sales grew by close to 17% for both Q2 and H1 FY24. And as she mentioned, HDFC Bank, Federal Bank will be on our radar because of earnings. Apart from that, CIAT and SAN DLM we'll also be watching out for them as they'll be declaring the Q2 results.
All right, Surbhi, thanks a lot for catching us up on all of the weekend's worth of stock-specific news that came through. Finally, it's over to Nigel, who's looking at cues from the futures and options space. Nigel, how are things looking?
Well, morning, Pavitra. From all the cues that you all mentioned, the fact that gold prices bumped up close to around 3%, that's normally a cautious sign for global equity markets. So that's one factor that I'll be keeping an eye out on. And the other one is HDFC Bank for the second half of trade today, because year to date, it's been an underperformer by more than 10%. So towards the end of this, we'll get that chart up year to date of HDFC Bank as well as the Nifty. What are the cues though? On Friday, we ended lower, and the Nifty, that appears there was some unwinding of positions. But on the Nifty Bank, there was clear shorting that we saw because the index ended lower and the open interest did spike up out there. And that perfectly ties in what the FIs did. They added shorts here again, close to 11,000 contracts, and most of that is likely to be on the Nifty Bank itself. The short positioning continues to hold around 73% on the index futures on the whole. On the option side, they bought more puts than calls. So in case things go wrong, they're preparing for some kind of cushion out there. And on the flip side, they wrote more calls than puts. So that's telling you that at higher levels, they're expecting some supply to come in there. On the Nifty options data, well, two strikes were very important. 19,700 call as well as the 19,700 put. Just take a look at that. 25 lakh shares getting added a piece. But the premium on both those two, if you put it together, is closer to around 200 rupees. That's giving you a sense that maybe there's a short straddle in place. What is that? You write both those two strikes, you pocket the premium of close to around 200 rupees, and you're playing for that broadband, 19,700 plus 200 points, 19,700 minus 200 points. So that's how you're getting that range of around 19,500 to 19,900 odd. Levels we're tracking, well, we are going to start a little bit lower, so below that 20 DMA odd. The 50 DMA, that's the crucial support zone at around 19,600, and the recent high, well, that becomes a bit of a resistance. The GIFT Nifty, as I said, is suggesting a bit of a downtick, but the important stock for the second half of trade will be HDFC Bank. As I said earlier, year to date, it's a relative underperformer. Can it give up that underperformance is a crucial factor. Back to you.
All right, that will be the big one to watch. Nigel, thanks a lot for that. In fact, like Nigel mentioned, HDFC Bank is in focus ahead of its second quarter earnings. This is the first earnings that the banking major is announcing after the merger. So we're going to line up all of the expectations when we come back.